All right, we are live back with Stock Tricks with Nick. If you guys have been following along, I was on vacation last week starting, starting Thursday. So I was gone from Thursday till this Wednesday. No access really to internet enough to trade. Also don't like to trade on vacation. So I did cut all of my trades on Wednesday of last week at the close. Which seemed like a great idea at the time, right? Because we'll go to the chart later, but if you look, Wednesday, market looked really volatile, just broken below some moving averages, and I was like, this is the perfect time to get away, let the dust settle a little bit, and then come back and start to hit it hard again. But unfortunately, while I was away, we had a lot of growth stocks break out, gain a lot of percentages in stocks that I was in before I left. So that's always hard to see, but it's also kind of a confidence booster because if I was able to pick out those stocks that were breaking out before and I just missed it because of vacation, I'm going to be able to pick those out the next time they come around. So it's frustrating that I didn't make the money this time around, but I know I do have the skills and kind of the pattern recognition needed to do that in the future. So, gone for a week, market has been going well. If you're new to this channel, we do these live streams each Friday night to do a recap of the entire market, the trades that I've made, both the good ones and the bad ones. I know a lot of YouTubers or TikTokers like to just show all their winning trades and how easy trading is. If you want to hear how easy trading is, this is not the channel for you. I uncover all of my trades, all of the difficulties, all the mistakes that I make because you probably learn a lot of good setups on people that only share their winners. But if you only know how to handle winning stocks, winning setups, and something starts to work against you, now you're unprepared for the hardest part of trading, which is how to handle your losses correctly. So always an open book on that. And we'll share all my losses, all the mistakes, so any money that I lose in the market will pay your tuition so you don't make those same mistakes. I'm mostly a technical analysis trader, so like to stick to the charts as you'll see later on. I listen to the news, but don't let that affect my trading much, but we'll go over how some big news impacts trading in a little bit. So if you do find value from this live stream, we do these every Friday night. And also I'm going to be doing these on each Wednesday, more so just kind of like a check-in, show you what positions I'm holding, show you my watch list or possible trades for the second half of the week. But where this will be more of an hour-ish long live stream, those Wednesdays ones will be quick, 15 to 20 minutes. Just try to get out there. Instead of posting on StockTwits all the 40 or 50 stocks that I review, I'll just do this in a video. Speaking of StockTwits, if you don't follow me there yet, go ahead and follow me there. And Twitter, StockTwits, I usually review 25 to 30 stocks a day and do take suggestions. And then on Twitter, I'll narrow that down until the 2 or 3 stocks that I'm really looking to take positions in the next day and post it there. So 2 good places to follow. Also on Twitter, I always talk about this. I don't find all of my positions that I take or trades that I take on my own. If you follow good traders, they'll be posting the good setups, quality risk-reward plays, and basic trading knowledge. So every Friday I do a Follow Friday to all the really great traders that bring a bunch of positions to my table and that you'll be able to learn from as well. So follow good traders to become a great trader. With that said, let's jump to the screen and we'll hit up the agenda. All right, so, nope, wrong one, sorry, one sec. All right, already kind of covered the first one, vacation at the wrong time, but it's always a good thing to get away from the screens. Maybe not on a week-long vacation. I was out in Montana on a road trip, so definitely no way to trade for me. But it was really, really nice to get away from all the screens, get away and get excited about trading again. I felt like with all the volatility we saw going into that last week, I was kind of burning the candle a little bit harder than I should have been. So getting a good step back, getting refreshed, and I was very excited to come back to the market because I saw how good it was doing until today. So I'll cover also how I scaled into kind of what I saw as a rebounding market, a booming market. A lot of the growth stocks were really breaking out. So how I got into a couple positions. And I know this is going to mess with the YouTube algorithms, but important news that we have to cover: Trump testing positive for COVID, First Lady testing positive for COVID, how I traded around the news, and how I plan on doing so in the future, and something that might help you guys as well. As always, we do technical analysis on Fridays, so if you have any stocks that you'd like me to cover, please drop it in the comments section. Here, I'll post there. All right, we already got a full comment. Yeah, we'll cover that, Paul. So leave any comments of stocks that you want me to review. And I also have gotten a list from Twitter and StockTwits to cover as well, along with some of the positions that I'm in that I want to cover. So use that comment section on anything that you want to see. And then we'll wrap up the stream. So that's the agenda for today. I ask you, please, if you do find value in these live streams, leave a like, a comment, and make sure you subscribe, because that really helps the YouTube algorithm push these videos out to more traders. And I would love to be spending more and more time on this, but it's really hard to start up a YouTube channel, get that rolling. And we're very, very close to another milestone. I think we're at like 697 subs, so 700 is right around the corner, hopefully after we post this. But I ask you, only do the like, the comment stuff if you do find value. I hate being that guy asking for this stuff. So if you don't like this video, if you don't like the stream, and there's no value to it, don't leave a like, don't leave a comment, don't help me out. But if I help you out, help me out. All right, so let's just jump into the markets really quick. We'll do a market rundown. So yeah, we could start with SPY, and this is the S&P 500. Let me get the comments up. There we go. So this is the S&P 500, and let me change this so you can see descriptions. Really quick, I'm going to run through everything on my chart. So we have the yellow is the 200-day simple moving average. This red line is the 50-day simple moving average. Green is 20-day simple moving average. And my favorite is the purple line here. That's the 8-day exponential moving average, calculated a little bit differently. We also have the blue Bollinger Bands, which kind of creates a channel for the stocks to trade in, tracks volatility there. It's 2 standard deviations away from the 20-day simple moving average, both above and below. We got volume here along with the 50-day average volume, so we could track when big orders are coming in, big volume days. That helps tip the institution's hands when they're buying. And then we have a price relativity here to QQQ, which has been the leader since COVID. So that's what I kind of will test the stocks to see what is showing good price relativity, what's holding up better. So let's see. I left last week, I think 23rd. Yeah, so this big red down day was the day that I left. So you can see why I was excited to just liquidate all my positions, take some profit on good trades, and just enjoy the break. But we found a bottom here on that Thursday. Big move on Friday, brought the S&P 500 right to the 8-day exponential moving average. And then Monday we saw a gap up continuation. Gaps are always tough for beginner traders, and still tough if you've been trading a long time without a plan. So Paul, you already mentioned that. That's a great question. We'll cover that in a little bit. So Monday we gapped up, but volume's getting lighter on each of these moves. But even on that little consolidation, volume was even lighter. So at this point when I was checking at the end of the day, I'm like, wow, market's actually looking good. I'm excited to come back to this. This should be a good market to bring the money back into. Wednesday, we got another huge volume day that kind of sold off a little bit and later on in the day, closed right at that 20-day and 50-day simple moving average conversion there. So that's the resistance for the time being. And then I came back, started some positions on Thursday. Market moved higher. We moved over that 50-day, over that 20-day, closed above both of those. So I'm thinking, here we go. A lot of growth stocks were breaking out on that day as well. I'm like, all right, just in time. And then we get the Trump COVID news, and the market gapped lower, kind of popped higher this morning, tested that 50-day simple moving average, and then was pushed down. So let's check QQQ. This is the NASDAQ top 100. And similar story here. Bounced back. We actually cleared the, we cleared the 50-day on 9/28. So even earlier, this started bouncing back. You saw a good uptrend here, and that's what I was seeing as well. Super small volume on that consolidation day, which is exactly what you want to see from a strong market. Volume comes back when more buying comes back. We just keep moving up on this trend, and then just bad news for the market with Trump's COVID. So we gapped down. I think we opened down around 2% in the NASDAQ at the open. The nice part was it opened right at the kind of converging area of the 8-day exponential moving average, 20-day simple moving average, and 50-day simple moving average. So a lot of traders took the open and bought right at those levels. And you'll see that often when stocks start to pull down to these moving averages, that they'll bounce for a short bit at these times, or at these moving averages, and move higher. So what my plan was going into today, because I did take some positions on Thursday, I was about 20 to 25% hedged with a QQQ short position with everything that I had on. But once I heard the news, I knew we were going to be a gap down day, because a president getting COVID, regardless of if it's a Democratic or Republican, it's never good for the markets. So gap down. When I opened up E-Trade and checked, I was down, I think my personal account was down 2.8%. And I'm like, man, this is gonna be rough. But I didn't panic, and that saved me, because at the open, not at the open, but in pre-market, some of my stocks that trade very, very light volume pre-market were down like 9-10%. So overall, I was down about $1,000. I ended up being down only like $90 today, which is great, and it happened because I didn't panic, and I saw that we were opening right at this converging area of all the moving averages. So I figured we might get a little bit of a bounce or just an immediate drop through there. Either way, I actually pulled my stops off. So Paul in the comments is talking about stop losses, which I always preach. Keep your stop losses, because they'll get you out of bad trades. There's no reason to stay in trades that are working against you. This is a little bit different of a case because it's such big news. What I did this time around, and what I might be adopting in the future, just like I don't like to put on trades, or I shouldn't put on trades, which we talked about last live stream, in the first 30 minutes to an hour. You also want to be careful that your stops aren't just getting triggered by a gap down day, because say I had a stop in a stock that was like, oh, if you go down 5% during market hours, then get me out. But if we're gapping down 7-8%, all those stops that aren't taken off will get triggered at the market open and flush the stock and the market down further. So I didn't want to be part of that group that gets flushed out on good positions that might just be getting flushed out by the algorithms early on, and then the market comes back up. So I took all my stops off, which is not typical of me, and just sat on my hands and waited for the first hour to go by. My plan was wait for the first 30 minutes, first hour, and then see what the low price put in the QQQ or S&P 500 or some of the stocks that I was watching. Because the first hour, that gives you that low, that support area. Now, if the stock bounced and then broke through that area, then you know there's weakness. And that's when you want to get out of some positions, lighten up, or start adding heavier hedges so you could stay in some quality positions. But that really made the difference for me, because I would have had stocks stopped out immediately that came back. We'll talk about a couple of those later on. Another really important thing that I did today, and I always love to do when the market's red, but especially on gap down days, is check what stocks that you're seeing that is either green or is holding up better relative to the other growth stocks. So when I check, Zoom was a good one right at the bell. So this is why I have price relativity down here, because I want stocks that are better than the market. I want to be in stocks that are really strong. So when things start to get volatile, I can short QQQ and kind of hedge my position. So with this, Zoom went green because it's one of those COVID stocks, showing great relative strength. I did have a position on from the previous day, so I just wanted to be hands off on that. But when growth stocks that have been industry or market leaders in the past are either green or showing that they're performing better than the indexes during these gap down or just typical red days pullbacks, that shows that they're strong. And when the market does turn over, they're going to be the first to get lifted higher. So I was just going through, taking notes of what's still green, what's looking good, because if the market pulls back, those are the stocks that I want to put money in. Hopefully that covers your question, Paul. Let me know if you have any more. So those are the two indexes and kind of the market review. So let me jump back to this. Scaling into a booming market. So now when I say a booming market, for growth stocks, they were breaking out throughout the week, and I came back on Thursday. So I didn't want to jump in with all my money on a single stock. I always preach, have written out position size rules for yourself. So previously we talked when the market was really shaky, I had a 5% of my account as my entry point on a stock, but the market looked great when I came back on Wednesday night. So when things are looking good, I do use a 10% of my capital on a starting position, and then I might scale into that if it breaks out, pulls back on light volume, and then breaks out again. So a couple positions I did start with 10%, a couple I started with 5%, and then just because I took a few too many positions on Thursday, I did also put on a QQQ short of about 20 to 25% of my portfolio. So a few stocks that I got in was Zoom right at the end of the day. So what I was looking at here was showing good relative strength. Obviously, it popped up on earnings, pulled back, then just a monster through here. So I missed this move, but I didn't want to miss out the next time. But I was being patient for it to create a constructive base. So kind of pulled back, gave a resistance point here, and then I just did a low cheat here, where if you kind of draw it down from peak to peak, that just allows me to get into the position a little bit earlier. so I could put my stop losses at a tighter place and give me a better risk reward. So I got a few shares at the open, and then it pulled down, and I wanted to give it some time. And then I got the rest of my position when it broke over the high of the previous day. That's another great place to add to a position or start a position. So I got in right at the open, and I do have 10% on this position. Let's see, another one that I put on was EVRI, EVRI, and this was one that I got on, let's see, or sorry, not EVRI, my bad. What was it? EXPI. Got a request for EVRI. We'll come back to that in a little bit, but EXPI, this was, let me throw my trading history on there so you can see. This has been a monster stock. Let's see what this has jumped from. It's up 365% from sometime in May. So great, showing great strength. I want to be a part of it. I did try a position here on this breakout, sold some. I think this was basically a break even, maybe a little bit of money on here. Tried again on this little downturn, and then it broke out here, did the low cheat, got out when it broke under the 20-day simple moving average and under my stop loss. So missed a little bit of money on that trade, but it's still showing really good price relativity while the market's been shaky, and really constructive the past couple weeks. So when I came back, I had this on my watch list, wanted to be a part of this, and drew that line with the highs here. So I got in, price was at 42.60, and I actually got in a little bit after this. So because it wasn't an ideal buy point for me, I only bought with 5% of my portfolio. I'll be pretty strict on that, where I don't want to be chasing positions that have already broke out with too heavy of money. If it's close enough to a breakout position, like where I got in, let's see, what price did I get in at? Got in at 43.36, so 43.36, a little bit higher, yeah, somewhere in here. It wasn't the ideal, so I just got in with my 5%, and also I'm trying to scale into positions. This is my first day back. I'm not trying to hit any home runs. With the election coming up, even before the Trump COVID, I knew this is going to be volatile. As I said last live stream, this is not a time to be swinging for the fences. We don't need home runs to be profitable. We don't need home runs to beat the markets. Sometimes singles and doubles will do the trick. So 5% on this trade, broke out, closed super high above the Bollinger Band on great volume. I'm thinking this is going to be a home run, even though I just started with a 5% position. And then the news came out. Let me get rid of some of these guys. And if you look at this support line that I drew, even if you drew it without the low from today, look at where the low today bounced right off at, right at that support line. And then if I remove that, you can see it's also right at that 20-day simple moving average. So technical analysis does not always work. There's no 100% in trading. If anyone tells you that this stock is going to go up guaranteed, they're lying to you, and you shouldn't take their advice. What I want to be doing is just stacking the deck with as much probability that will make me a winner. So looking at technical analysis, that will add some probability on my side. Using correct position sizing, that's going to help me be profitable. Keeping my losses small using stop losses, that's another thing that gains probability to being profitable. So you're not going to see ridiculous like swings in profit and loss for me. I'm going to try and stay consistent because the more consistent you are, the better it'll pay off in the long run. Like I said, I missed some breakouts while I was on vacation, but I saw those. I was in those positions. So training your eye, training your kind of emotions to handle the trading from a risk first perspective is really important. So risk first is always going into a trade saying, how much can I lose on this trade versus how much can I make? And if you do that and really just focus on setting good trades up, the P&L will take care of itself. You don't have to worry about that. So this was one that I got into, and because I didn't have my stop loss set, nothing triggered on this. It showed good relative strength. It's still closed down 4%, but it did bounce off that support area, closed kind of in the second top half of this breakout candle. So we'll see how Monday goes. Let's see here. Let's start with some stocks that you guys wanted me to cover on Stock Twits. So first one is Apple. And this is obviously a market mover. So when we look at the QQQ, that's really driven by Apple, Amazon, Microsoft. And so you'll see this, and the price relativity to QQQ is pretty flat. There are some spikes in there, but for the most part, nothing too crazy because this makes up so much of the NASDAQ. But what I was looking on here when I came back was it pulled back, bounced up, but then made a higher low. And that's a great sign. So higher low, then you can start drawing some support lines. And you can draw this out here and then kind of make a channel. So this is what I'm looking at right now with Apple. The volume today does not include after hours trading, so we'll have to see how that looks come tomorrow or Monday whenever it updates. But what I saw here is we opened, we gapped lower, but similarly to QQQ, right at that 20-day, 50-day, and 8-day moving average. So a lot of support in that range, a lot of different types of traders looking to buy for a bounce there. And that's what we saw. It opened, popped up over those moving averages, and then as the market trickled back lower, kind of closed right at that area. So what am I looking for next week on that is, I mean, where does the market open on Monday? There's so much news that's going to come out this weekend that it's impossible to tell for sure. Like I said, no one knows for sure. But what I'm looking for is this support line. Does this hold? Or do we break below and then start testing some of these lows? So if you're in Apple already and we break under this diagonal, you take some position size off if you're a swing trader. If you're a long-term investor, this is not the long-term investing strategy. This is trading strategy. So if it breaks below this support line, you take some off. If it breaks below either of these lows, you take some more off because you want to keep your money in winning stocks as often as you can. You don't want your money especially you don't want your money in a downtrend. You don't want your money moving side to side either. You want to constantly be taking as quick of profits and good profits as you can to compound your returns. So that's Apple. If Trump comes back healthy, markets are great on Monday, and we bounce back higher. Now, if it breaks over this resistance point, now you can even add to this position because we got a lot of room up here to cover before we get back to new highs. So that's what I'm seeing on Apple. Another one we had to cover is Alibaba, BABA. This was one that I was looking at because it created the perfect breakout setup. I was just a day late for it. So what do I mean by that? If we zoom out, get the whole picture, this has been in a pretty consistent uptrend, a wavy uptrend, I'd say. But then as the market pulled back, this pulled back as well. We zoom in a little bit, but we see good, let's see, from market top was 9.2. This is still holding relatively strong, right? So it did pull back, but it's not breaking under kind of the horizontal price relativity. So it's showing some strength here. Pulled back from the top to the first bottom, 11%. So what we're talking about here is the volatility contraction pattern that Mark Minervini always talks about. So that's where each of the pullbacks come on less magnitude and ideally less volume, because that means with every pop, some people that got trapped up here are taking profits or just taking taking the trade off for minimal loss or even. And then you want to see every pullback be a little bit lighter. So that first one, that was 11%. Then here, and this is just kind of me rough drawing these. It's not exact, doesn't have to be exact. This one's 6%, so we go 11, we go 6. From this little pop down, that's 4.5, maybe give it 5. Yeah, give it 5. Found support at that 50-day simple moving average. It's not as important where the intraday lows are, but where are the open, where are the close? The close especially is very important. So we saw the 50-day simple moving average hold. We saw 3 mini pullbacks, 3 pullbacks, each one getting smaller and smaller. So volatility is contracting. You see volume from the first kind of lighten up through here. And then we're good to go. So this gapped up. And on gap ups, I never like to chase because you never know if a gap up is going to just sell off. But this one held the low of the day, found some support at the 8-day exponential moving average. Next day we got consolidation here, so volume's lightening up, and then this is ready to go. I would have, let's see here. Once it was clear that we were closing over that 8-day, I would have tried to take a position here or even the next day where it made a new high, I think. Let's see, 279.30 against 278. Yeah, so either at the close this day or when the stock moved over the previous day's high would have been good places to add here. And then we got the breakout. And so let's see, from that high, that's quick, easy, 5%. Volatility contraction pattern there. Oh man. Now, it has broken out. Let's talk to the people who are in the stock already. How are you handling this trade? So a good consolidation day. Not every stock that breaks out just keeps on breaking out higher and higher. So on a red day, you don't want to just give away the stock because there's going to be some short-term traders that are like, hey, it's up 5%. That's awesome. I'm a quicker duration trader than you, so I'm going to take some profits. You can't control that. People are trading on different time frames as you are, and that's why I like to stay out of arguments on Twitter and StockTwits on what's going to happen, because we can both be right depending on our duration that we like to trade in. So gapped up, moved up, huge volume, all good signs of a breakout. And then kind of moved sideways here, stayed in the top half of the candle. So that shows good strength there. Volume lightening up. And then on today's news, look, down 0.65. That's not nearly as much as QQQ. So good price relativity there. Low volume on the move and still stayed above the low of this breakout day. So what am I looking at? And what I think, not know, no one knows, what I think will happen come Monday. If news is still bad or still volatile, watch for this to move lower and test that 8-day exponential moving average that's rising up. So that provided support down here. It could do the same up here. What typically happens on these breakouts and pullback days is the low of the breakout day will be pierced. So watch for Monday's low to break under the low of this price and then move back up. So if it breaks under the low and kind of breaks under this 8-day moving average and then bounces back up, then you stay with the trade. Things are good. If finds some support, that break under the low is something that happens all the time to shake out some traders that put their stops right at that area. What you don't want to see is a close below that area. So if we close below the low and below the 8-day moving average, it's not catastrophic because there's the 20-day and you do have some support in this area. And then even worse, if things get even worse, you have the 50-day. But you would want to start scaling out some of your position, take some profit. You never want to add to a losing trade. If the market's telling you you're wrong on something, you should listen. So personal rule, never ever add to my losers. If I'm going to make money on the trade, the stock's going to move back up and I'll make money that way. I don't need to be adding money when I'm wrong. Never think you're smarter than the market or you're tricking it. If you're wrong on a trade, and this is what I've learned and has really helped my trading. If you're wrong on a trade, start scaling out because you want to keep your losses as small as you can. So your winners, when you have solid sized or large winners, they'll pay for all the losses and even more. So that was Alibaba. All right, so let's jump to comment section 1, VXRT. All right, so this is a new chart to me. Actually, I might have seen this earlier in the week, but what do we see here? We see huge volume on this breakout, and I don't know anything about this stock, about their fundamentals. I'm just a technical analysis trader looking for good setups here. So we get the breakout, kind of pull back to that 8-day twice, so 8-day exponential moving average providing support on the breakout up. Get a pullback continues, so still over the 200-day simple moving average, but it broke under all the kind of shorter term ones. And now it's kind of getting that same VCP pattern, but a lot larger of a pullback than I personally would be looking at to trade. So 74% from the highs there. Again, I don't know what's going on with this company, but 74% usually takes this off my watch list. But just because my strategy doesn't trade it doesn't mean it won't be a profitable trade. Again, I have no idea what duration you're trading on. But saw another huge volume day. So these sell-offs all happen on very light volume. And then when the stock does move up, it moves up on huge volume. So that does give it some strength to those moves. Then you saw, let's see, move higher through here. And then 3 times here, tried to pierce and hold over that 50-day simple moving average, but that's the resistance. So now that it pulled back, bounced, pulled back, bounced, volume's lightening up, and then picked up on these past 2 up days. So this does look good from a technical perspective. Not something that I will personally trade, but what you want to be watching for is does the stock undercut these lows? If you're in the position already, if it starts moving below these lows, you got to take some position size off. You don't want to stick with a loser as it's going down because there is this gap below here. So that's at high of 547, $7 to 547, 14%, a little bit more than that. You don't want to stick with a stock that's down 15% from your entry. But on the upside, if this can break and close, especially close over that 50-day simple moving average, you might see another volume spike up and kind of test the 3 highs up here. So that's the 940 range. So again, watch for it to break the lows. If it does, you're going to see a gap, likely to see a gap fill below those lows. Then you get the 200-day simple moving average. You definitely don't want to be holding through that. But then 50-day break and close over that typically will lead to a test of the previous highs at 933. So thanks for writing in for that. Hope that helped. Another one we got was CSIQ, and this one kills me to talk about because I was in the stock before vacation. It was a beautiful breakout setup. Definitely a chart that you need to study that we'll talk about here today because it had breakout written all over it. I just wasn't here for it. So you can see I bought in, let's see. Why does it do that? Bought in at 29.78 and sold 31.50 because I was leaving on that day. But we talked VCP, volatility contraction pattern. What we're looking for is a leading stock in an industry. So this one's up 200% from its 52-week lows. That's great. Now we're likely to miss some of these first trades here because it's below the 200-day simple moving average. But once the 200-day starts ticking up, that's something to watch for. And I missed this breakout here as well, but then I saw pullback from the top to the first bottom. That's 22%. That's golden. Now we're looking for a lighter pullback on the second one, and we get 12%, so 22, 12, and let's see, 29.77. I'm trying to remind myself of the trade. 29.77. So I bought this after it opened, moved lower, and I did not buy at that point. And then when it went back above the 8-day exponential moving average here, that's when I started my trade, because I did want to kind of get that low cheat where I could put my stop just under some of these lows and still keep around a 5% to 7% stop loss to keep my risk low, but probability for a big win still there. And thought it was happening on the second day. I bought it right at the end of the day, so I thought it was happening basically on the first day. We got a huge move up on increased volume here. That's another thing that you always look for. When it does break out, it has to break out on volume. A light volume breakout is more likely to pull back to the breakout zone. So if you're going for, if you want everything to work out, you're looking to stack the deck in your favor. You want high volume on that breakout, but low volume on each of the pullbacks leading to that breakout point. So this was Wednesday. Thursday kind of played around. Did it undercut that low? Let's check. 28.70 to 28.78. So it did, by 8 cents, undercut that low. That's why whenever I put my stops, I try to put 0.5% or a full percent under any previous lows, because a lot of the times they'll just go in and just skim right under that previous low, and then bring the stock back up. And you hate to see that. Sometimes happens, but you don't want that. And then we got, I don't know what news or anything, but got big buying volume over that 50-day volume average. Good breakout, cleared above the previous high, closed above all these previous highs, and then it's off to the races. So let's just do how much did Nick suffer here? 31.50 to the closing price today. 14% from where I sold. It sucks, but this is one of the things. I was able to identify this, so that gives me confidence that I'll be able to do that in the future. So it's basically like practice. What you learn in basketball practice or whatever, when you have a good practice, you're feeling good about yourself. It hasn't happened in a game. It might not have translated just yet, but when you work on those fundamentals, or not stock fundamentals, but trading fundamentals, the sooner it'll translate to the money. So even though this ran on me, I'm lying. I was a little upset, but I'm fine with it because I'm starting to develop those good skills to identify the patterns. If you're in the stock right now, really no reason to sell. You probably took a little bit of profit as it went through multiples of your average gain. That's what I like to do. I like to take 10% off each of the first 3 of my multiples of my average gain. So on my average winning trade, I get about 7.5 to 8%. So if a stock goes 8% over my entry point, I'll take 10% of my position off, move my stop up, and 16%, 24%. Now I'm at 70% because I took 30% off. So I'm 70% and I'm just free rolling that. So if you took some profit and you got in early, you weren't chasing up here, then you're good to go. You're just kind of letting this run. We had a higher high, higher low today, even though it was a little bit red, but notice the volume on that red day was lighter, and that just shows how strong this is. So definitely something that's still on my watch list, but I'm not chasing. I never chase. I'll let this kind of pull back. Hopefully we get another, like a tiny pattern, and really a light volume pullback will allow a cleaner entry for a move higher. So that's CSIQ. We had a similar one in plug, PLUG. Again, this was from the comments in Stock Twits, so always let me know what you want to see there. So this one, I've also tried to trade in this a couple times. Saw a good pattern here that bought on the breakout, sold some into the strength when it made a multiple of my average gain, and then got stopped out when it went through my stop loss. Same here, we saw a little pullback, so I tried to get in on the break over that, and then I think this was the Wednesday I was leaving, so once it started moving down, I knew I was going to liquidate some positions, so just got out there. Pulled back even further, so if I was still trading this, I would have been stopped out the next day because it did gap down a little bit and press down lower, but the close happened right at that 50-day simple moving average. You notice the lower wick is under the 50-day. That's why the low of day is important to look at, but it's especially important to look at the close. It's just two pieces of information to kind of paint the picture. So that 50-day held with the closes and the opens. You see the open right at that price, moved higher. Does that mean you're buying at this point? No, I wouldn't be, not with my trading style. But since then, it's moved up and cleared the 20-day and the 8-day exponential moving average, and it's working on a nice uptrend here. And today, it gapped down and undercut the lows of the previous day, but you could see it held support right at that 8-day exponential moving average, so make sure you add that to your chart. Low of the day bounced right around there, and we moved up for a bullish engulfing candle. What I mean by that is the highs of today were higher than the previous day's high, and the lows of today were lower than the previous day's low. And bullish engulfing is a bullish indicator. Again, does that mean it has to go up? No, it does not. Technical analysis and anything with trading is not exact. You're just adding probability in your favor. So with that, if you're already in the trade, we're still above this high here. We're right at the previous peak. And honestly, like, if we get good news on Monday or this starts moving up, this might be like a longer range volatility contraction pattern. Let's see here. 26% on that one. 20% on that one. Man, I would love like a third just pullback day to really tighten up the coil and then a move higher. So I forget who called this out, but really, really interesting chart here. We have almost, here, let me extend that even out further. 1, almost 2, 3, 4. So 3.5 highs, I would say, are right at that price of 14, 13 area. So if we start moving over that, man, this definitely has room to run higher. So PLUG, something to add to your watch list and really monitor on Monday. Good call out. I forget who it was, but I'll post on Stock Twits. Thanks for bringing that to my attention. And EVRI was what I was mistaken with EXPI before. So let's take a look at that. Zooming out to get the full picture here. Has cleared the 200-day simple moving average, but that 200-day is not yet in an uptrend. typically one of the filters I look at. It doesn't have to be, but I want to add all the probability in my favor as possible. So 200 days still in a downtrend. So there are some longer term traders probably not adding just yet. So what am I looking at here as I look at this for the first time? We get an increasing price relativity compared to QQQ. So we always want strong stocks that are showing good relative strength compared to the indexes, because we want our money in the winners. We don't want any money in the indexes or the losers. So since July, showing good price relativity, had a good consolidation here. So if we draw a little, there's a lot to digest here. A lot of long wicks, both on the up and down side. Let's see. Those held as the lows until today, but we gapped down, found some support at the 20-day simple moving average, moved back up, closed just a touch higher than yesterday. The thing that concerns me a little bit on this is look at the two volume on the 2 green days we had here. They're lighter than the 2 red day pullbacks we got. So for me, there's just more stocks out there that have better probability of working out. Doesn't mean this stock can't break out of this and then move higher, because it does have some room to run, and kind of very light volume through this base here. So it's not like you have too much overhead. What I mean by overhead is when a stock spikes or a stock has sold off and there's a lot of volume in this base, that means there's a lot of traders that are going to be happy to take the trade off at break even if the stock ever gets up there. So if you see breakouts to that point, you'll likely see sell-offs, and that'll pull the stock back. So it won't be as clean. This doesn't have as heavy volume in the longer base up here before it broke down. So not as much overhead there. But like I said, there's other stocks that are setting up more constructively. So this isn't something that I'm looking at trading. Let's see how we're doing on time. Got a little bit. Let's jump back. We have AMD next. So this one is really, really interesting. So it popped up, pulled back, kind of broke out again. I did take a trade in here, bought on this mini VCP pattern with the breakout over this low. So got in, ran, kind of let it run up to here. Once it started closing above the upper Bollinger Bands, took some profit, and then got stopped out when it came closer to my break-even price. Since then, it's kind of dropped down. Let's see. Dropped down and was making lower lows. So during this period, you're not buying. You're not buying during a downtrend. You want to wait till a constructive base forms and then buy when it breaks over some resistance on the upside. So let me move that guy here and this guy. So wait until it starts to form a little bit of a base right there. Or you could see just a first dip down, and then when it pulls down the next time, it doesn't pull down as far. So that's higher lows. That's another good sense of strength there. So here what I would do is just kind of draw the channel there. This isn't a trade that I took though. There's kind of free charting here. But we did see a little increase in volume, buying volume here as it broke higher, broke over all these moving averages. So now it's kind of clear of all of those, moved all the way up, and now you're really seeing higher highs, higher lows in an uptrend through here. And without the news today, this likely would have kept pressing higher, but did see a lower low, lower high today. A little bit heavy volume on a pullback, but I mean, with the news today, you expect some heavy volume. What I'm looking for, if you're still in the stock from a good constructive position or good constructive price, is this converging 8-day exponential moving average and 50-day simple moving average to provide some support. If it breaks below that, then you got the 20-day and kind of the top part of this lower channel, and you should be scaling some out here, some out below when it breaks through the channel, and then back here it would likely bounce around or just head lower. Again, we don't know what the news is going to be like over the weekend, so we're just plotting out some what ifs, and we'll be attacking Monday with a plan and not trading with emotions, because when you trade with emotions, you're very, very likely to get your trades wrong. So that was AMD. It is showing good strength. If it does pull back to like the 20-day, we can get kind of like a VCP pattern going here, and then I'll get interested in buying. I just kind of missed this, can't catch every fish. But definitely have this on my watch list. We'll be looking on Monday. That's AMD. And I think this might be the last one we have is NVIDIA, NVDA. So you can see I was in this trade earlier and kind of sold off as it kept making multiples of my average gain, and sold a little bit early through here. There was really no reason to sell because it stayed above the 8-day exponential moving average. That was something that I was struggling with before, probably still do, is selling a bit too early when there's no real reason to get out of a stock, because you saw it just jumped up 15% from that point. So there's money to still be made in that trade, but got a really nice entry on that and let it run for a bit. Since then, we see September 2nd, this pulled down. Let's see here, 20%, the second pullback, 10%, so good pattern forming, and then let's see one more, 6% there. Ooh, look at that volume. Volume really light today on the pullback day. I did not take any of these trades in here, but you see it make a higher high. So this is in an uptrend. The lows were higher lows all the way through here. That's important as well. So this is back in a constructive uptrend, but we need to look, again, have some places mapped out. That 8-day exponential moving average, right where the stock closed, if that can hold on Monday, that's a great sign. If it starts moving over the high, that's my buy point. Because if it breaks that, that means we've got some good news, and then it could likely retest the highs here. That'd be 9.5%, 10% on that trade. But if it keeps breaking down, now you're looking at the 20-day simple moving average and basically this upper support that's drawn from the 921 lows and the 924 lows. If it breaks under that, you got to get out. There's the 50-day simple moving average, but at least start scaling out of the trade. You want as little money as possible in stocks that are working against you, that are giving you a signal that, hey, you're wrong on this. Really quickly, just want to run through the stocks that I am holding over the week or over the weekend. Won't really do much technical analysis on this, but I'm holding Crowdsource. Oh wait, let me go in order here. AVTR, this was the one that had the really light volume that was down 10% or something this morning, and I bought yesterday on the break over here. So I was immediately going to be down 10%, but I did not freak out. I let the first hour play out, and then was going to come back and check if we broke the lows there. This didn't. It gapped down, went below the 20-day simple moving average, but pushed back higher, and we closed just a little bit red, down 1%, and on light volume. So something I'm still in, and plan on holding that. We have Boot, B-O-O-T. This was one that was brought to me on Twitter, so great call out here. Kind of shows what I mean. 200-day simple moving average isn't in an uptrend yet. Typically one of my filters, but this was something that was going green, showing good relative strength. Not a kind of very popular stock, so when the entire market's shaky, I like to get in these less popular stocks because there's less correlation with the market. And as the market goes down, it won't go down as drastically. But we see a little pullback, 200-day simple moving average held as support, and now the 50 days in a clean uptrend. So I bought when the stock broke over yesterday's high at 29.40. I did only start with a 5% position, maybe a little bit more than a 5% position, because of the news today, but this was showing great strength, great volume on that move, great price relativity, and has closed over the previous highs now. So really, really clean move through here. We got a gap in the chart right here at, what is that, 32.37, so maybe another 7-ish% move, and then we got another one up here. So I really, really like what I saw today. It was my best performing stock, and I didn't trim anything just yet, holding this over the weekend. That's Boot, CARR, CARR. This has been basically forming these waves since August 11th-ish. And I had tried to take a trade before, got stopped out, break even or a little bit lower, and then took the trade today because we saw that bullish engulfing candle. I bought in when it broke over the previous day's high. Only concern was that it came on very light volume. So like I said earlier, we want breakouts on heavy volume. This didn't technically break out, but it's showing some good relative strength. So only 5% of my portfolio is in this right now. I see after hours volume, or price, but who knows what that means. We'll see come Monday, but something I'm holding on, and hasn't broken out yet. So if this sets up constructively, something that you guys might be able to take. CRWD, CrowdStrike, great VCP pattern here. We get pullback 24%, pullback 8%, and then 8.5%, pullback 6%. I bought this on Thursday, first day back, with a 10% position, 143.77. Really, really light volume on the pullback day. Closed above the 8-day exponential moving average and showed good price relativity during the beginning of the day, then kind of sold off, but still holding this, still like this one, and hasn't really fully broke out, so might be something to watch. We covered EXPI before. KIRK is another one that I put really a light position on because I didn't get my ideal entry. I should have bought right when it broke over the high the previous day. I got in at, I think, like 890. Let's see here. Yeah, 893. Moved higher on good, constructive, increasing volume. Pulled back today on light volume. Still held over that 8-day exponential moving average. Something to watch because, again, we saw that VCP, bigger pullbacks, then lighter, then lighter, then lighter as volumes drying up. That's a pattern you can apply to any stock, and again, not 100%, but puts probability in your favor. Leonard, kind of a similar wavy pattern here, broke out. I took a position a little bit late when it went over the high on from Wednesday on Thursday. Good price relativity today. Light volume, went green. Looks good to go here. Still like it. LVGO. Took this trade today when it broke over the previous day's high. Got a little cup. Might see a bit of a handle here. Hopefully we don't pull back to this 20 and 50-day simple moving average, because I will get stopped out of at least a portion of my position if it does. But looks constructive. Little volume on today's move, so we'll see. Let's see. We got TECK, again, another one where it broke out from a good constructive base of 30%, got a pullback of 13%, gap up, pull back the next time 6%. So again, less magnitude. I bought on Thursday when it went over the previous day's high, gapped way lower, but found some support at the 20-day simple moving average, immediately started moving up. Good volume on this green day, and isn't too far away from that breakout zone. So if you're kind of drawing a pennant here, if you can get anywhere in that range, not a high risk entry, but if it opens well higher on Monday, you got to let it run. Never chase. And then Zoom we covered, still in the stock, still have 10% on the position. We'll see how Monday goes. And with, let's see, one last one, sorry, MAXR. Took this trade on Thursday with the break over the previous day's high. Completely missed this 31% move up here. So kept it on my watch list because it pulled back constructively, then I could get in. Didn't want to chase at these levels. Did pull back while I was gone, and then bounced up, pulled back a little bit to give a good entry here. Did not get the low cheat there, so went with the break over the previous high. And then today kind of just squatted, stayed above both the 20-day and the 8-day exponential moving average. So with all of these stocks that I'm in right now, they're showing good price relativity. Any pullbacks happened on lower volume. Any green days happened on increased volume, except for CARR, and we talked about that. That's why I'm lighter position size on that one. But with all of that, I do have a hedge on QQQ. I took 20% of my position hedged yesterday, and at this point I'm 85% of my portfolio hedged. So what do I mean by that? I think I have, so for every dollar I have long, 85 cents is short QQQ. So right now I'm not trying to hit home runs. Absolutely not the time to do so. Election coming up, Trump has COVID. The market's already been volatile before that. So not the month to swing for the fences. So I have good, strong stocks showing good price relativity, with good volume patterns, possible breakouts, but am hedging with QQQ. Ideally, market turns around on Monday, I lose money on QQQ, and because all my stocks are relatively strong, they'll all float higher than QQQ, and we'll make money on that way. It's always easier to make money when the entire market's in an uptrend, when growth stocks are breaking out, and that's what we were seeing Monday, Tuesday, Wednesday, and Thursday, when I got back on Thursday and kind of crashed the party. So sorry for that, guys. All right, let's see. With that said, let's kind of wrap this up for the week. So, like I said earlier, if you found any value in this live stream, please subscribe to my channel. We'll be doing those Wednesday midweek recaps, just 15 to 20 minutes to cover the stocks that are in my portfolio and a couple stocks that I'm watching for the second half of the week. So more kind of quick, just technical analysis stuff. Be sure to write in any stocks that you want me to cover during that, either during the comment section or on StockTwits and Twitter. Speaking of StockTwits and Twitter, make sure you follow me on those. StockTwits, I recap about 30 stocks a day and take any suggestions. So I'll always say it's chart time, and then you give me any suggestions and I'll cover those. On Twitter, usually 2 to 3 stocks I'll post about that I'm looking to enter the next day. Always do this live stream on Friday to do a pure recap of the week and more of kind of the trading lessons that I learned as well. So a little bit more than the technical analysis. I know that I said I was going to talk about my September results. I did not get enough time to compile those to get the trading statistics like we talked about when August wrapped up, but I'll have that ready for next Friday. So be sure to tune in. We always do these at 7 p.m. Central Time. With that said, have a great week. Get away from the screen. Get away from all screens for a little bit. But then come back Sunday with a plan while the stocks aren't moving, while you're not gaining or losing money, so you can trade with a plan and not based on your emotion. All right. Have a great weekend. Make sure you like, comment, and subscribe. And I'll see you next week.